All right, Opendoor earnings have come and gone, and the price, it don't look pretty, don't look good at all. But let's see what we can make out of the chart and the news for Opendoor in the future. So we're going to start with the weekly chart, and as you can see, it's red, 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 red. Only chance we had to go back up was this green candle right here, and it just kept going down, going down, going down. All right, a daily chart, we're looking at a downtrend. Weekly chart, we're still in a downtrend. 4 hour, a big sell here with the red candlestick. And so let's look at the support and resistance on Opendoor. Then we'll look at some news about Opendoor and see what can happen next. So the weekly chart, the support going to be in the $5 range, unfortunately. First support is going to be at 549. Then the resistance is going to be at 572, 592, and 682. Those are three resistance that we need to break to get back in the $6 and $7 range. So tomorrow, if we can break 572 or 592, that's going to be a very good positive for Opendoor if we can break those. If not, the support is going to be at 549 and 502. Pretty much it as far as the chart. I want to clear the chart up a little bit. I want to show you something about Opendoor where I had some concern about, right? I had some concern about. Opendoor is up from 51 cents. Everyone knows that's a huge jump from 51 cents to $10.87, right? That's why a lot of people and institutions were saying this is going to be an easy short, because a lot of times we have a stock that goes from such a low price, 51 cents, to a high price in just a short amount of time. It's going to be shorted. Shorts are going to be confident that there's no way they can hold that price, 51 cents to $10.87, right? So that's why people were shorting it. Only way Opendoor could have held their price around the $7, $9 area is if we had a lot of good news. The economy was doing great. Job numbers were great. People were buying houses. The interest rate was also dropping. We had all that good news. Then we can continue to hold this area right here at the $7, $8, $9 area. But we're just getting piled on with bad news after bad news. The job numbers, government shutdown, the Federal Reserve unsure if they're going to keep cutting or not. They still don't know. Sometimes they say they're going to cut interest rate for December. Sometimes they say they don't know. And then home buyer sentiment was bad. People still aren't buying houses yet. We have a lot working against us. The only way we could have held this area 7, 8, 9 is if we had everything going our way. So since everything wasn't going our way, that's why the price has been in a steady decline from $10.87 until what we have now, $5.57. The earnings were bad as expected. The guidance was decent. Talked about AI a lot, right? But it's just that the whole economic situation that we're in at the moment don't look good for our houses. That's why we're in a decline. When the economic situation gets better, the government opens back up and the economy starts to look better, job numbers look better, interest rates continue to cut, we can hold some gains. We can start holding some gains again. But we have to wait until that happens. And right now, no one knows when that's going to happen. We can't even see our data reports right now because the government is closed. So a lot of issues going on. The second issue I had was 51 cents to $10.87, right? As I said before, when you have these stocks that move up real fast, a short period of time, a lot of times you're going to give it back 50% of what you gain. That's the reality to a lot of these stocks that move up fast the way Opendoor did. Only way that doesn't happen is if you have constant news, a good economic situation, and everything is going the company's way. So what that means is that Opendoor may give back 50% of what they earned from 51 cents to $10.87. So if Opendoor gives back 50% of this run right here, from 51 cents to $10.87, we're possibly talking about could be the $4 area if it keeps going down lower. $4 area or the low of even $3.60. Sounds low, right? But that's just the reality of it. If we don't start hearing some good news, some good reports, government doesn't open back up, that's going to be a good area to load up in. Hopefully it doesn't. Hopefully it stays in $5.50 and go back up from there. But that is the reality of stocks that move real fast. A lot of times when these stocks move real fast, 51 cents all the way up to $10.87, you're going to want to take some kind of profit, half or a quarter profit at the top. It says potential positives for Opendoor earnings. Opendoor is refocusing its business strategy towards becoming a software and AI company, which may position it for innovation and growth in residential real estate transactions. The company's CEO outlined a clear path to profitability with specific objectives to increase acquisitions, improve unit economics, and build operating leverage, indicating a proactive management approach. Management provided measurable accountability through an acquisition contract dashboard, allowing investors to track their progress toward key objectives. The expectation of a significant increase in acquisitions by at least 35% in Q4 2025 highlights a strong anticipated demand for Opendoor's services, suggesting potential revenue growth. So those are the positives for Opendoor. And then you have the negatives. Significant decrease in revenue from 1.3 billion in Q3 2024 to 915 million in Q3 2025 represents a decline of approximately 34% year over year. Net loss increased to 90 million in Q3 2025 from 78 million Q3 2024, indicating a deeper financial distress. Decline in key operational metrics, including a 29% drop in homes sold from 3,615 in Q3 2024 to 2,568 in Q3 2025, and a significant reduction in home purchase and inventory levels. So a lot of these negatives is because the housing crisis is pretty bad. A lot of people aren't buying houses. A lot of people can't afford houses, and interest rates are high. So that's why these negatives are here. But if the housing market starts to get better, a lot of these negatives will start to disappear, and then we can focus on the potential positives. And then the CEO says, we are refounding Opendoor as a software and AI company. In my first month as a CEO, we've made a decisive break from the past, returning to the office, eliminating reliance on consultants, and launching over a dozen AI-powered products and features that demonstrate our renewed velocity. Software and AI will chart a path to profitability for Opendoor, according to the CEO, who said that the technologies will enable the company to transact with more sellers, strengthen its unit economics through better pricing and resale speed, and also drive operational efficiency by being ruthless on expenses. Looks like he's branding Opendoor as an AI company, software and AI company, which is going to be good, help revenue, cut expenses. So that's a good thing. But it seems like this company is more geared toward the long run. So making a quick buck from Opendoor with shares, probably not going to happen. But, if you still believe in Opendoor, wait for the low of the lows, right? If it goes to $3.60 or $4, definitely a load up. Possibly anything in the $4 range, $4 to $4.50 may be a load up as well. $5 is about 50-50 chance if it's going to go up or down. But $3.60 to $4 is going to be a huge buy area if it goes down that far. Let's hope it doesn't, though. But you just never know. The economy is looking kind of bad based on the job reports. When the government opens back up, we can see more data reports and kind of get more of a grasp on what's going on with the economy. Like, is it getting better? Are people losing jobs, starting to get in a position to buy more houses? We don't know much. We don't have data reports. How can you know the state of the economy if we don't have data reports? So first thing first, we gotta get the government open, and then we can start to see some data reports, and hopefully we go up from there. All right, everybody, take care, subscribe, comment, and like. See you next time.